Good morning, this is Steve O'Hare from PIA First, and we're looking at the FX majors the week starting 30th of July 2018, and we're coming to the end of the month, so we're looking at how the monthly charts initially are looking price action wise and drilling down to the shorter term time frames. So highlights from Friday: the US GDP data consensus targets, although markets were primed for an even stronger figure, and the dollar lost ground following the release. The yen was protected by ongoing speculation that the Bank of Japan could adjust its monetary policy framework at Tuesday's meeting. US equity markets retreated amid losses in the technology sector and concerns surrounding earnings, with Asian markets also lower today, Monday. Oil prices dipped lower in choppy conditions, with gold also retreating to near 12-month lows. So we start with the euro dollar, and we can see we're in a long-term bearish trend channel. Prices have reacted, and from this 125 area, 125.30 to 50, and that is where the trend or the channel resistance comes in now. Over the last couple of months, we've seen bearish price action. A doji candle formed last month in June, and July looks to be doing exactly the same, and it's actually been contained within last month's price action. So indecision, we've got this level just below at 115, which is a key psychological and a key technical level. So if price action is to break that 115, we'll see further euro dollar weakness. A quick look at the weekly chart. We're forming a bearish flag. Last week's bearish engulfing dominates, looking for a break again of this 115 level to confirm this move. We're currently negative on euro dollar, looking to sell in the 117.50 area for better risk reward, but a break of this level could lead to further downside. On the monthly chart in cable, sterling dollar, again, similar sort of picture, although obviously cable dominated by Brexit negotiations, which aren't going particularly well. And we've seen this is coming up to the fourth month of negative price action. We had the shooting star candle posted, followed by further downside after the break of 137. And we've hovered just above the 130 level, reacting back off there during this month to form almost a doji-like candle. So a little bit of indecision, a little bit of correction from them lows. The weekly chart has seen this this five-wave completion, and we're in the throes of a correction lower. We're obviously seeing price action being under pressure over the last couple of weeks, with this 130 level acting as key. We're trading currently around the 131 or the 50% Fibonacci retracement of this this previous rally, and that comes in at 131.32. So trading just close to there at the moment, but with this weekly Ichimoku cloud above, we remain under pressure in cable. Dollar Swiss in a bullish trend channel. Reacting, we've redrawn the channel to show the support, potential support coming up. Reacted off here, a morning star reversal here led to more positive price action over the last few months. That's from April. That's April's bullish move. Now, currently, if we break it down to a shorter term time frame, I'll break it down to the daily chart. We can see we had this AB equals CD correction that met the target and then formed an evening star formation, even doji star formation, good formation, came lower, but price is currently holding just above the 99 level. That is key from both a technical and psychological level. We've seen prices come lower at the start this week, and obviously this was Friday's price action rejecting the rally towards 100, and we're currently now trading just below there. So under pressure at the moment. A break of 99 should lead to further negative price action, but the actual sell-off should be limited. We've got plenty of horizontal support coming in on the dollar Swiss. Dollar yen, we saw this. We believe we saw an AB equals CD correction lower. Hasn't quite turned out that way. It stalled around the 105 level and posted a morning star, doji star formation. So this is positive. Obviously, we've got the impact of the yen was basically with the Bank of Japan looking to adjust its monetary policy. Tuesday is the meeting date, so currently we've seen a little bit of more positive price action over the last weeks or so, and this is what we're seeing, almost a bearish flag, bearish pennant formation forming, but we've got this nice upward trending support line where prices have reacted off over half a dozen times, so that looks pretty good at the moment. Dollar CAD, we're in this descending wedge formation, can almost be called a bullish pennant. We've broken above the top of this channel, and although we've posted negative price action this month, prices remain above the channel, so it remains slightly positive on that monthly chart. The weekly chart, however, paints a slightly different story. We've seen the sell-off down, but we expect price support to come in at 129.37, maybe for another push higher and an even deeper correction. Aussie dollar, this big expanding wedge formation, this goes back to 2002, and we can see over more recent times being in this slightly upward trending channel. This is obviously a corrective move of the deeper correction backwards. Let's break it down to a shorter term time frame. Price action have broken through the broken this ending wedge formation and retested the level at 76.74, but the bearish engulfing led to further negative price action. But we have been over the last 5 or 6 weeks, it's just been dips been bought, rallies been sold, very choppy conditions, and no real direction over that last couple of months. Let's have a little look at the daily chart, and we can see this sideways price action. The range very much 74.85 on the top side, 73.10 on the downside, with prices moving in and around here. But overall, slightly negative. Prices below the Ichimoku cloud. Looking at euro sterling, we've got this ascending triangle or ending wedge formation, with prices reacting again off the bottom of this support, but I haven't been reacting in a massively positive way. Prices still hanging around this very narrow range, and if we think about it over the last, well, since October last year, we've very much hovered around the 88 level, pushing slightly towards 90, so slightly stronger for the euro, but remains capped by that psychological barrier. Euro yen on the monthly chart posted a bearish outside month back in February. We saw a couple of months of corrective rallies, but then again another bearish engulfing candle, and we're seeing this this correction higher again. But the rallies look to be limited. We continue to look to sell into this euro yen strength, and although we've got the Ichimoku cloud on the monthly chart supporting currently, it remains under pressure. We've got this expanding wedge, a very volatile period, but it's being capped around the 132, 134 area. The bottom of this trend line, let's move it along. On the weekly chart, we're looking at 124. This low posted back in May, 28th of May, 124.62. So still looks a likely target over the more medium term. Thanks for joining us. Hope you've enjoyed the medium term preview on the FX majors, and we look forward to seeing you soon.